Hey everyone, Mike Katz here with 7 Points Capital, bringing you a discussion about volume profile. We've been getting a lot of messages and a lot of requests to do a little explanation about how we see volume profile, how we use it, and I thought it was a good video, so here we go. I wanted to talk a little bit about this chart here. So it's a static chart, and we'll try to step through it and try to figure out what goes on behind the scenes when buy button is pressed, when the sell button is pressed. And what we're going to do is we're going to limit the number of participants to three, where Mike, Dave, and Jen are three participants in Netflix. Nobody else could trade Netflix, just to keep it simple, and you guys will see why I want to do this. So basically, spot one here on the chart, if you look at my cursor here, you'll see that at spot one is where we have a trade. And let's look at that example here. Mike is looking to buy Netflix at 330, right here where we have a 1 on the chart. And he goes and he says, who wants to sell it to me? He might go to Jen and she might say, no, I'm not a seller of Netflix. He might go to Dave and then Dave says, you know what? Let's trade. Transaction done. You want to buy 1,000 shares and Dave is willing to sell it. Bam. So Mike buys 1,000 at 330 and we have a trade on the tape. Okay, so stay with me here. And the reason I want to do this is a lot of times beginning traders think that their fills come from a magical place, and it's important to understand that on at every transaction we have two parties to the trade, and the P&L ends up being a zero-sum game, right? So let's go to the next spot. Now spot two. You can see it on the chart here at 331. Mike says, well, I'd like to buy another 1,000 shares at 331. And Dave says very willing to sell it there at 331, thinking I sold it at 330, sold it at 331. It'll come back down and I could make some profits and buy it back, right? So at this point, Mike is long 2,000 shares that you guys could see here, and his profit is $1,000 on the trade, on his position so far. Dave is short 2,000 shares, and at 331 price level, Dave is down $1,000 on the trade. Okay. And so far, Jen, she hasn't traded yet. She's just waiting for her setup. She's waiting for an opportunity to trade. So let's go to the next spot. At 333, you guys could see here, number 3 on the chart. Mike says, this is working. I bought it at 330. I bought it at 331. And now this price is at 333. I want to buy some more. And he buys another 1,000 shares at 331. At that point, his position is 3,000 shares, and he's up $5,000 on his overall position. Dave is willing to sell it there again at 333, and his position is 3,000 shares short. And at the price of 333, his current P&L is he's down $5,000 on his 3,000 shares. And again, Jen hasn't traded yet, right? Let's go to the next one. Now, spot 4. We could see on the chart that we had a pullback here at 332, right? And at 332, Dave was saying, okay, you know what? Not only do I want to sell it at 333, I'm going to push the price down and try to put some fear into Mike and sell it to him at 332. That way, if he says, well, Dave was willing to sell it all the way up and now he's willing to sell it even lower at 332, then Dave is trying to put some fear into Mike and selling it at a lower price. But Mike says, you know what? I'm still bullish on Netflix. I like it, and I'm going to buy at 332. So there's another transaction that goes off at 332. And you guys could see, right? Mike's long 4,000 shares, and at 332, he's up $2,000 in a position. And Dave is now short 4,000 shares, and his P&L is down $2,000 in a position. Okay, let's go to the next spot now. Level 5, right? Spot 5 here on the chart. You could see when goes back up. Guess who gets involved now? Jen comes in and she says, I think that Netflix has been acting well. I want to buy some, see if it goes up. Well, she goes to Mike. Mike's not willing to sell any. She goes to Dave, and Dave says, okay, I'll sell you 1,000 at 333. So, and you guys can see the position, right? So now Dave is short 5,000 shares. He's down $6,000 on his position at 333. And let's go to the next one. Now at spot 6, Netflix pulls back, and Jen is a breakout type of trader. So when she bought it at 333 over here, then when it didn't go up, it pulls back, she gets out. So she wants to sell it at 332, and she loses $1,000 on her trade. And who does she sell it to? Dave is thinking 332. I sold it at 333. I could buy it back, make 1,000. Great, right? So Dave's kind of getting happy, and now he's back to being short 4,000 shares. He's only down $1,000 at this current price because he scalped 1,000, and he has 4,000 shares left, right? And Mike is just sitting here at 332. He's still long 4,000 shares, and he's down. He's up 2 grand. Next. Then the chart moves up. Spot 7. We can see here. We'll go, what Jen says. You know what? It looks like you might go up again. I'm gonna buy it. I'm gonna try to buy again. So on mark 7, we could see that she looks to buy again. 1,000 at 333, and that's right. Dave sells it to her. So now he's short 5,000 shares again. And at that point, his P&L is down $5,000. At that price, Jen, she's long 1,000 shares, and she's still down $1,000 that she scalped before that she lost. And at 333, we can see that Mike is up 6 grand. Man, that kid's a good trader. Let's go to 8. Stock breaks out, and you can see on the chart it breaks out, and Jen says, you know what, this is acting well. My breakout is working. I want to buy some more. And she buys another 1,000 shares at 334. Now she has 2,000 shares, right? And she buys that 1,000 shares from Dave again, and Dave's now short 6,000 shares. He's building up his position as it's going up. You could tell that he's getting very uncomfortable here, right? It's going against him. He had a little bit of a pullback, and was able to buy back 1,000 shares at 332, but then starts going up again, and now it's 334. And Dave's P&L is down $10,000. And at this point, Jen is flat on her P&L because she's lost 1,000 when she scalped before, but now she's up 1,000. And then Mike is sitting pretty long, 4,000 shares at 334. He's up 10 grand. Okay. Now, I want you guys to start realizing what's going on here. The reason I'm going through this exercise is I want you guys to see how the longs are sitting pretty and are happy. Dave's starting to get very nervous, and he's not liking what's going on. Okay, so he starts to say, you know what, I got to start closing out. I got to close out this position. I'm hitting some pretty big losses here, and my position's getting too big, and it looks like Netflix is really strong. And he says, you know what, I'd love to get out of my short 6,000 share position at 336, which is right here on the chart. He says, I'd love to take it off. Who's going to sell me 6,000 shares? He calls up Mike, and Mike says, you know what, I'm not a seller here at 336. Sorry, can't help you. He calls up Jen, and Jen says, all right, I'll sell you 1,000 shares at 336, but only 1,000 is what I'm willing to sell. So now that the transaction takes place at marker 9 here on the chart, right? Dave starts to close his position, but he's only able to buy 1,000 shares. There isn't anything else offered at 336. Jen is only willing to sell 1,000 shares. So now you could feel that the squeeze is starting to happen. He needs to close his position. Dave needs to close his position, but there isn't enough supply. There's only 1,000 offered at 336. And now he's getting very nervous because the second he buys it, he pushes the stock up. Let's see what happens next. Stock pulls back in a little bit and he says, all right, 335. I'll bid 335. Who's willing to sell me any shares at 335? And Mike might say, you know what, now it looks like it's curling down from 336 to 335. He says, you know what, I'll trim my position a little bit. Okay, and so he sells 1,000 shares to Dave at 335. And Dave's starting to wind down his position, but he can't buy the whole position back. There's only 1,000 offered there. So Mike's starting to scale out of his position, but the next available offer for Dave to buy from is at 337. He can't even cover his full 4,000 shares. He's only able to buy 1,000 shares at 337 from Mike. And then he's starting to get really nervous at that point. At 337, he's down $25,000. Mike is up $20,000, and Jen is up $5,000, right? And Mike says, you know what, it's 337. This thing is ridiculous. I'm down 25 grand on this position. Just get me out. I give up. What price are you guys going to be willing to sell this stock to me? I need to buy 3,000 shares. And basically, Dave is at the mercy of whatever Mike and Jen want to do because they're the only two sellers here, right? And they know that Dave is stuck. So they might say, you know what? All right, at 338, we're willing to sell because that's fair value for Netflix. And Mike says, I'll sell you 2,000 shares at 338. Jen says, I'll sell you my 1,000 shares at 338. And Dave buys it back at 338. And now everybody's flat, right? Everybody's flat, and you could see the P&L. Mike's up $22,000. Jen's up $6,000, but Dave is stuck for $28,000. And they knew that he was stuck, and they made sure that he paid up at a higher price, right? So now it might come back down, and Dave might say, oh, I'll try to short it again, but the same thing's going to happen again, where the short's not working, the longs are in control, and he's just going to put himself in a bad situation again. And looking at the volume profile, you saw that here between 332, 333, 334, the volume profile is showing us that there were some trades here that were taking place, right? And later on, we see up at 337, 338, where now Dave is getting out of his position, volume profile picks up again. And that's exactly what you see. So basically, the whole concept of volume profile, in my opinion, is to be able to spot transactions where spots on the chart and price levels where there are a lot of transactions taking place. And then if we move away from that area, we can kind of figure out who's stuck. Are the long stuck or are the short stuck? And when we moved away from 333, 334, we knew that a lot of volume traded there, and it's most likely that the shorts are stuck. All right, so here's some more examples of what I mean by volume profile, and let's go over this real quick. So I took a screenshot earlier in the day on how this one looked CDTI, because I knew it was going to look different by the end of the day when I was going to get a chance to record this video. So let's look at this here. This is how it looked midday at around 2 o'clock. And later on, we filled in a lot more here at the top on CDTI. So this was a symbol that took off to the upside. And I was really looking to trade this on the long side. And the reason I was looking to trade this on the long side is because there's a battle going on here between longs and shorts, right? And the battle is that the shorts are thinking this is trash, it's not going to go up anymore, and they're selling into it. The longs, who have been long for a while and are putting on a campaign to get to be able to push this up and sell the stock, maybe to the public, or to push it up to have an offering to the public. For whatever reason, they're looking to get this up. But at the same time, you don't want to be too early, right? So when I see a volume profile like this here, the buyers are winning. As of 2 o'clock here, the buyers are winning. And I'm looking to join the current trend. And based on what I see here, there's significant higher lows. Volume profile here, and I hope you guys are able to see the area. I'm basically focused on the area to the right of the X. The volume profile here shows that most shares change hands here. Okay, and every time we get above it, what's going on here is that the longs who bought here at average of 120 throughout the whole day, when we're at 130 and above, they're feeling really happy. The longs who missed out and didn't have a chance to buy, when next time it comes back down to 120, guess what? They want to buy, right? So that's their second chance to buy. So that's going to create support. The ones who got filled before here at $1.20 and are long, they're not nervous at 120. They're not nervous at 130. They're going to start getting nervous 110 at $1 and below, right? But it just comes back to their price. They're not nervous. So when it pulls back, there's support here. I want to join that. And then it pops up here again to $1.50 and double tops a day high, right? That pullback, I want to buy. Why do I want to buy here? Well, if you look at this move up here, you can see that volume definitely spiked up. That means buyers are stepping up. Okay, the shorts are on their heels. And then that dip back to the breakout area is where the shorts would look to break even and cover their shorts. So you have buyers there. You also have the longs that missed out on the buy opportunity, that they're going to be bidding here in order to get long. So that's another bidder there. And then that's a good spot for me to join trend and buy dips in an uptrend. And I use volume profile as a spot to figure out where did most shares change hands, so that when it comes back to test that level, I'd like to use that and lean on it, right? And I want to be able to buy on that dip. So that's exactly what happened here. And we traded this one today. It ended up getting rejected here at day high, but the dips were buyable and we sold into the pops. And a lot of times what will happen is that you have the big push that ends up going higher and higher, and then basically the shorts are really under pressure and the longs are happy. So that's what we want to join. But today, if you guys, some of you will probably see this later on, but in the trader takeaway video, I go over how we bought the dip and sold into the pop, bought the dip here also, sold into the pop, but when it started failing and not making it back up to 150, got out and got short and ended up catching this move. All right, so what that ended up telling me was whoever was buying here, they were using this lift to sell, right? And then later in the day, you could see how the volume profile looks a little bit different. And what this tells me is that the volume that was being absorbed here on the long side was unloaded here. Okay, and this was just share rotation. So whoever's putting on a campaign at this spot, they didn't put on a huge campaign, because the longs who are squeezing the shorts, they're buying at 120, and it looks like they're unloading here at 140, 150. Okay, so they're not making a huge rip on this. So this could be a small time player, right? So, but a lot of times what you'll see is you have these types of situations where there's a much bigger spread between this volume profile node and then the next one later on where they unload the shares. It could be dollars at a time. What are some symbols? Let's see if we could step through a few of these. This was a really nice one. Okay, look at what's going on here. Stock takes off to the upside, pulls back. Trash name, I would never invest this on the long side in this, right? Definitely not long term, just a trading vehicle. Pops again recently and then starts to go sideways, spends a lot of time here. Look at the volume profile, bam, right? So now when we get below here and we take this move down, guess what? Everybody who bought at $10, all this volume, they're out of the money. So then we get a spike back up here. Look exactly what happens. Everybody who's stuck long is saying, get me out. I want to break even. They become a ceiling here because they have all these shares that they're long and stuck long that they want to unload. So that becomes supply. So my trade here was I used this spot, this bounce into this resistance to get short, and I'm putting my stop above here, above these highs here and above the volume profile, meaning if it gets above 1050, if it gets to 11, that means that everybody who had to sell here was able to sell. So that means that the strength is back. And that's where I want to put my stop, where the pattern falls apart, right? And that's exactly what we got here. What's another one? This was one, right? CARV. Look at this run from 3 to 12 back down to 6. What's going on here? Well, you have this push up from 3 to 7 and then consolidates. Well, they're saying we're not ready to completely get out of everything here. We're supporting the stock so that we can sell it higher. Well, that's what happened here. They squeeze the shorts, get it to higher prices, and that's where they unload all these shares here in these volume profile. And that's where this thing ends up falling apart afterwards, right? So I always look for pops into resistance, pops into volume profile nodes so that I can use them as resistance to get short, right? What's another one? This one is one that's not going to be the easiest one, right? Because it goes up and then it holds. It never really gets below. It spends a lot of time here. So we got this big pop and sideways. Look at all the volume to trade it here at $4, right? So when we get back above, when it looks like it's going to fail, look where it bounces off of. Bam, $4. That's support. That's all these shorts. They need to buy back shares. So it goes up, comes back down. Again, there's support, goes up, comes back down here again. Guess what? More support. All the volume that traded here takes off again to the upside. Right? So here you could see that but at the end of this chart, the volume is not as concentrated at any one level anymore. It's spread out and there's less information here as far as one specific level anymore. Okay, this is a level here, 750, and then all of this below is a level. So when I'm looking to short something like this, I'm really careful. I'd rather have a massive volume node above so that we're now going up and into that resistance, and I'm using all that overhead supply in my favor, and they'll basically look to sell the stock there. And we'll have a few more examples here, but you guys get the idea, right? This one was from yesterday. Big push up, all this volume profile, and today this was a really easy short. Well, I shouldn't say easy, but it's just a short because the volume was distributed above. Smart money was selling here, and you have a lot of stuck longs, a lot of bag holders that are waiting and hoping for this thing to come back. Well, if this thing comes back up here like that, well, guess what's going to happen? Most likely, these longs are going to put a lot of pressure on this, and you're going to get a rejection here. And that's usually a good spot for me to enter right here, going into this area, and having my stop either above here or above here. Okay, so that's another few examples of volume profile and how I use them to spot important levels on the chart. So recently, we've been having a lot of low float stocks moving up and not really retracing back down the way that most low flow traders are accustomed to. And the volume profile has saved us a lot of headaches and a lot of losses by just realizing what's going on. Okay, let's go over a few examples. ECYT has been one that's been running, right? Usually a stock that goes from $3, $4 to $6, that's a good spot to get involved and try to see if it wants to top out and retrace back down, especially if it's a very trashy name. Well, what do we see here? We went up from 3 and 4 to 6, and we paused sideways for a couple of days, and look how much volume traded there. That means that whoever thought at 6 it's expensive sold, but the buyers overpowered the sellers here at 6, and we kept going higher. Well, we kept going higher, we went up to 10, 11, and started to consolidate, pull back. But what do we see here? We see a lot of volume traded here between 9 and 11, right? And then we ended up going higher again. So what does that tell us? Whoever was selling, whether selling their longs or selling their shorts, or selling short here between 9 and 11, they were overpowered by the buyers, and they're scrambling now as they're covering, trying to find ways to get out of it. So this is similar to that Netflix example we just went over. You could see that the shorts are definitely under pressure here, and the longs are sitting pretty, right? Let's look at another example, Intelstat. This was one that's and really giving the shorts a hard time. From 4, traded a lot of volume here at 5, cleared it, stalled out here at 9. You could see all the volume between 9 and 10, but just couldn't pull back and ended up going through again. And then more volume traded here at 12, 13. And then what do we see here? Bam, we take off again. So the shorts are just getting destroyed in stock like this. How do you know? Well, every time it takes a pause, every time the stock just goes sideways for a little bit, the buyers end up overpowering, trading through the volume profile and going higher, right? And most real traders, maybe paper traders, could average up and add to their shorts as it's going up. But if you're trading real capital, this hurts. You can't just keep averaging up, right? So you know that the shorts are in really bad shape. Let's look at another example, HEAR. Now this is one that went from $2 to 6 and then pulls back, okay? Pulls back to 3 and starts to tick up again, and this looks like another great short and starts to go sideways. Look at all the volume that traded here between 4 and 5, between 4 and 6, okay? That's everybody thinking it's expensive, it's going to go back down, let me sell. Either sell out of my longs or get short. Well, the buyers overpowered them, and look at this subsequent move, just unbelievable. It goes up, and then when it dips back down, guess what? Buyers are still strong, the shorts are scrambling, they have to buy back. There was just a relief sell-off for one day, and then bam, takes off again. And then you could see that the volume is now found the spot, the stock has found the spot where there's equilibrium, everybody's happy to trade here, and then eventually whoever overpowers will end up winning. So if, let's say, the buyers are still really strong and end up buying and overpowering the sellers, this will go up again and it'll trap the shorts that much more. If the sellers overpower here and the buyers are not willing to pay up these prices, then this will end up trickling lower and going back down here. And whoever bought here, most likely between 4 and 5, unloaded here between 16 and 20, and they're happy, right? And then you have the bag holders are just going to sit there and watch this thing drift all the way back down and be stuck at higher prices. So that's another example of where the volume profile comes in to be really handy. Here's another quick example of how I use volume profile. SBOT, trash name, runs, pre-market runner. We can see that it makes higher high, higher low over and over, runs up, starts to stall out here at $3 and goes sideways, and then gives one final push to 350, puts in serious volume, pulls back to support this consolidation, and then starts to go sideways. Now it's very clear that the volume profile to the right, spending a lot of time here at 320, it gives the sellers a chance to sell. Now why do I say sellers? Well, the reason being, If this was a stock that's under accumulation and the longs are in control, we would see this. We would see a move up, pull back, move up, pull back. All good so far. Move up, pull back, right? Still very good, healthy trend. Move up, pull back. And what you want to see here is, again, a bounce. Higher high, move up, but you don't see that, right? So what you end up seeing is sideways, sideways. So whoever's selling here, all this volume to the right, volume profile as is visible, instead of letting it bounce and letting it get up there to new highs again, they're using this opportunity to sell. Okay, so that becomes very evident with volume profile as it's building. This thing drops below VWAP and then tries to come back up. At this point, everybody who's long in this range is going to be a whole lot of supply, right? So if we look at that range there, everybody who's long, everybody who's stuck long here is going to try to sell on the next bounce because it went lower, they're out of the money, and bam, right? It's coming back. So not all of this is going to be overhead supply, and that's going to be resistance. It's got to get above, it's got to get through all these sellers for it to continue going back up. And that's how I use volume profile when it comes to spotting trend reversals. When it couldn't bounce, went sideways, put a lot of volume in, goes below, gets back above, bam, right? It just fails and couldn't get back above. And that's, for me, I love these types of trades, and I'll use it both on the short and the long, and they work pretty well for me. So that's another little example of volume profile, and we'll be adding this to the end of the video. So on that note, I want to thank everyone for watching. Thank you for all the great feedback. If you are not following us already on YouTube and Twitter and checking out our blog, please do so, and we welcome any feedback. And keep an eye out. We're going to be unveiling quite a bit more of these videos where we'll be periodically taking topics that you guys are interested in, and we'll be making videos on how we use different tools, different indicators, trade management, psychology, and all that good stuff. So again, thank you all for watching. Mike Katz, 7 Points Capital, coming with volume profile.